Hi, this is James Robinson, and this video is going to serve as my December report as well as the year-end report for my investment fund for 2018. December was a horrible one for the S&P 500. In fact, it was the worst month in 7 years. For the month, the S&P was down 9.18%. As you might imagine, our fund was also dragged down by the greater market. Though we did do better than the S&P 500, we were down 8.25% for the month. We started the month with our shares being valued at 10.55%, which means we were up about 5.5% year to date at the end of November. We ended the month at 9.68% for our shares, which means we ended up losing about 3.2% for the year. In spite of the big loss, one of the things that we always say is our goal is to beat the S&P 500. And we did manage to beat the S&P 500. We did go down less than the S&P 500, and we did so. We beat the S&P by 0.93%. For the year, we've now built up a solid performance relative to the S&P 500. We've outperformed that standard by 3.8% for the year. However, again, due to the bad results in December and a relatively poor year in general for the market, our total performance for the year since January 1 is down 3.28%. Obviously, that's really frustrating since we were up about 5.48% at the end of November. That last month really did kill us. As a result of the bad December, my annualized rate of return and my final return for the year is negative 3.21%. As you can imagine, in a month there was this big a bloodbath. We had no stocks that went up the requisite amount to be a 15% return on investment, so we could move it from a short-term hold to a long-term hold. This month we added a marginal amount of new cash to the fund, less than 0.1%, not really much worth talking about. 7 stocks paid a dividend in the month. The amount was negligible in terms of cash on hand. Total dividends equated to about 0.169% of the portfolio value. So cash on hand remained below 1% of assets, and this is the second month in a row we've been fully invested. Every month we talk about how investors tend to undervalue dividends when thinking about the performance of their funds. We think that it's a very important factor. We like stocks that pay dividends and will tend to invest in those versus companies that pay no dividends, all other things being equal. So here's a chart of the dividends paid for the year. The good news is that on a quarterly basis, our dividends do seem to be increasing. That's because our companies tend to do better over time, hopefully. The result is they will pay larger dividends. We have a little bit more money invested in the fund, though not very much. But we also have profits from all of those stocks we've taken from short-term to long-term. And those long-term companies which didn't used to exist in our portfolio are now paying dividends. And that long-term fund is about 14.7% of our invested funds now. We don't think looking at the monthly performance of our dividends is very educational. That's because not every company pays dividends the same month, and some months therefore will be lumpy. There'll be a lot of companies paying dividends in one month and then not very many the next month, and so it doesn't give you a very good trend. But most companies tend to pay dividends quarterly, and so if we look at dividend income on a quarterly basis, we start to get a consistent measure. And here you can see that every quarter our dividends have gone up, and gone up actually pretty significantly. We don't think that trend is going to continue. We think the fourth quarter we're probably going to see some sort of drop off. Again, that's because the fourth quarter of 2018 was so good, simply as a result of a outstanding and unusual event where Thomson Reuters sold a division. So to recap, along with the greater market, our stocks were down in December, down a total of 8.25% for the month. We ended the year down 3.21%. The S&P was down 9.18% for the month. Therefore, we outperformed the S&P in December by 0.98%, basically 1%. For the year, we're outperforming the S&P by 3.8%. We had no stocks pass the 15% appreciation threshold and become long-term investments. I now have 19 stocks in the long-term investment fund. They total about 14.6% of our invested funds. I added no new stocks to the fund, so I still have 16 stocks. Cash remained at less than 1% of assets. We researched 0 new companies, found 0 stocks to track, and found 0 stocks cheap enough to warrant further research and to consider buying. That's it for December. That's it for 2018. Not a great year, especially not considering all the work we put in. We are happy at least that we beat the S&P 500, and we beat the S&P 500 most months and for the year in total.